Welcome to TradeTheMBI.com. This is John's report is for the 2nd of May. And well, we pushed up against the 61% Fibonacci lines right there. Still consistent, but overdone a bit with the magenta still riding above. Shorts pretty much fading out of that situation. So the short-term buyer push-up was enough to keep things moving. And now we're starting to see the red DOC picking up. So that should be enough to start propel things a little bit higher. We're still watching this shakeout. Need to get it into that positive if you're going to see any kind of sustained move. And as soon as it does go positive, the expectation would be a move towards the 100% level. So that would surprise a lot of people. But we're starting to get numbers coming in, and they're not, of course, meeting the expectations of all the doomsayers that thought that the tariffs and everything were going to result in this hyperinflation setup that has not materialized at this particular stage. Of course, they say it's still coming. Yeah, eventually. And of course, the shelves are all going to be empty in another couple of weeks. And again, we've already been over the debate on this and whether or not it's going to materialize. It's going to be a back and forth kind of situation. But from a Nasdaq standpoint, a bit stronger, and we can see that relatively speaking, we're almost just -2. So it's pretty close to getting to the positive side. And we said that the Nasdaq would be the leader on this, and we'd look for that play when we get back up to the 61% uh, from the fade off it. Of course, you're going to have these comments and things back and forth that are going to cause bounces up and down, and they love to respond to everything Trump says. And from a treasury standpoint, again, the Chinese are stuck into that difficult spot because you only have so much you can liquidate for your treasuries. You still have to keep some if you want to have any trade, though. At this particular stage, they're going to see a huge drop off, and they can't sustain it, despite what they tell you. There's going to be some move of trying to use third parties to get past some of the tariff situation, but that's just going to cost them more. So at the end of the day, they're still going to be losing money overall, broadly, and certainly it's going to impact quite a few companies in the U.S. But depends on whether or not they were smart enough to start last year switching. It's not like this was a surprise. Everyone was told what was going to happen. Whether they listened or not, and we said that the smart companies would be the ones that did listen. Everyone else would be like, crying in their little, corner, saying, how do we know? Because you were told. Pretty simple. Oil dipping down, that caught almost down to the full move to the zero. Caught a little bit of a bid coming back up there. Still facing some difficulties for it to be able to sustain this, but it's moving in the right direction for growth standpoint. It's got more to go, but you're better off down here in the upper 50s than higher, and that makes a big difference as far as how that trade narrative goes. Because if Trump's able to keep oil in check and moving lower, then you certainly have a lot more leeway when it comes to the tariffs. Obviously, certain countries are going to make agreements, and when those start to fall through, that's going to be, or happen actually, there'll be big news. And of course, it doesn't matter how much success there is because any improvement is better than what you had. Plain and simple. From a euro standpoint, it's still, impressive that it's up here, but still impossible for them to maintain this because money is going to have to move back into the U.S. for just the yield. There's no way around it. You're not getting that in the eurozone, so it's just a matter of time before those things even out. Now, of course, that increase really helps them when it comes to purchasing power for U.S. Items. From a gold standpoint, holding its own, and we expected it. Filled the positive extremes we were talking about from before, came all the way back across to the beginning of them. So that was necessary from a smoothing standpoint. But again, there's still a lot betting on the idea that there's going to be a rampant inflation. And again, I think that's still suspect because no one's forced to buy anything. We're not talking about staples where people have to buy them, and this is a discretionary spending element for individuals who will just choose to put off. But that has its own secondary items, and this will be affected in GDP because you'll see people holding off due to uncertainty. And of course, you see that from the narrative of the press, and it definitely falls along pretty lines as to the optimism on it. We saw that in the Michigan surveys, and that very strange how confused. People get with the economics of things, and now they bought the narrative that this was automatically inflationary. From a Bitcoin standpoint, continuing to push. It's all looking good from that standpoint, and relatively not the same impact from ETH. So that disparity continues to grow, getting bigger and bigger by the day. From a 50K standpoint, yeah, we started off strong and we ended up with a little bit of crossover weakness. Came down there with the magenta, not real much short activity until much later in the day. We started to get a little bit of crossover when the DOC spread took place, which happened right there at that magenta candle. And it did end up working its way all the way down to the 61% view from there. Didn't quite fill all the positive extremes because that would go all the way back to the 55, 52. That's your downside momentum push. Right now, though, you've got a short cover rally kind of built into this where you have rising and BI white with the magenta leading, and that always forces that broad short cover. They keep thinking that then they keep adding into it, but the key is just waiting for that turnaround where the magenta dips, and that gives you your entry to ride it back. So when that takes place, you've got that one covered. Pretty straightforward. And when we look at it intraday further into the 5-minute chart, we saw the early morning pump, filled it all back in. So you had your call buyers wiped out into the put buyers, they added in, and then later in the day, they got another bonus on that drive down lower. News related, of course, some of this is earnings reports not coming in as wonderful as they expected, but here it was in the post morning, and you can see they reversed it. So again, all those put buyers will wake up to the increase, and that'll wipe them out, bringing in new call buyers, and the whole cycle starts all over again as we end options for the week and prepare for the next. That's the long and the short of it. As always, trade well. Anything relevant, put on Skype chat.